President Trump wants to introduce new tax cuts, new tax credits, and even make certain sources of income exempt from taxes completely. And as taxpayers, it is important for you to know about these changes so that you can plan to take advantage of them if they go into effect and pay as little tax as possible. So as a licensed CPA that has fully reviewed his tax proposal, and as someone who tax plans every day at mycpacoach.com, I want to give you a very simple understanding of the major changes you need to know, and more importantly, how you can take advantage of them if they go into effect. Okay, so in 2017, Donald Trump introduced some of the biggest tax cuts since Ronald Reagan. He cut the corporate income tax from 35% to just a 21% flat tax for corporations. He created a new 20% tax deduction for millions of small business owners with the QBI deduction. He also increased several other tax deductions like depreciation, for example, which helped investors write off large portions of their investment property like real estate, equipment, and even vehicles. He also cut the top individual tax rate from 39.6% down to 37%, which benefited many high-income earners who already feel like half of their income is going to taxes. And for all individual taxpayers, regardless of your income, he basically doubled the standard deduction. For example, in 2017, the standard deduction was just $6,300 for single taxpayers, but as of 2024, it is currently about $14,600 for single taxpayers and a little over $29,000 for married taxpayers. So taxes went down for everyone across the board for the most part. We saw large corporations bringing their business back to the US due to the lower corporate tax rates, and millions of individual taxpayers saw more money on their W-2 paychecks as a result of Trump's tax plan. But now things are quickly changing. To start, most of these tax cuts will expire at the end of 2025 if Congress does not extend them. The top individual tax rate will go back up to 39.6%. The higher standard deduction limits for individuals will completely expire, and the 20% QBI tax deduction for businesses will expire, and so much more. Which perfectly leads us to Donald Trump's new tax plan for 2025 and beyond. So let's talk about what he plans to do going forward. So the first major component of Trump's tax proposal is to first make his initial tax cuts permanent. This includes keeping the higher standard deduction amounts, lower individual tax rates, and I also assume it will extend the QBI tax deduction for small businesses as well. But in addition to making these tax cuts permanent, there are several more tax proposals in Trump's tax plan, such as exempting tip income from taxes completely, for example. So basically, restaurant and hospitality workers who earn tip income will pay zero taxes on their tips under Trump's tax plan. Now, as a CPA, I can say that the government has historically had a hard time collecting taxes on tips to begin with. And that is because it is very hard to tax income that is received in cash, like tips. They have even extended tax credits to the owners of restaurants and hospitality businesses to encourage the employer to report their employee tips for them in exchange for a tax credit, but it is unclear how successful that initiative has been. But what we do know based on Trump's tax proposal is that tips will be 100% exempt from taxes, which will ease the administrative burden of taxing this type of income and also allow these workers to keep more of their hard-earned money. But this is not the only source of income Trump wants to be exempt from taxes altogether. It is also reported that he wants Social Security benefits to be exempt from taxes as well, which will greatly help people looking to retire or who have already retired. Now, if you're nowhere near retirement like me, just consider this scenario to understand this. Right now, you fund your Social Security benefits by paying taxes from your paychecks if you're a W-2 employee, Or if you own a business, you pay self-employment tax. Now, W-2 employees pay Social Security and Medicare taxes from their paychecks, and these benefits are supposed to be available to you when you retire. So I want you to imagine paying those taxes over the course of your entire working life. And then when you start receiving Social Security benefits, the IRS says you have to pay them anywhere from 50 to 85% in additional taxes on your Social Security income. Now, depending on your retirement income, this is effectively how the current system works. As a CPA, I have seen this effect on my clients, and when this tax hits you, it hurts. Some people will go as far as to say that Social Security is a complete scam, but that is not my place to say. Ultimately, under Trump's tax plan, though, these benefits would be exempt from taxes altogether. Now, the next big tax cut recently announced by Trump is his plan to eliminate tax on overtime pay, which would be big for the millions of taxpayers who work long hours and earn overtime, such as nurses, construction workers, factory workers, and so much more. Now, if you look at the entire tax code as a book of incentives like I do, then the motive of this tax cut would be to motivate people to work and produce more at their jobs, and those who do will be rewarded with lower taxes. Now, this will also help businesses who desperately need to find people to work and makes overtime more attractive for their employees. Now, the next potential tax proposal under Trump's tax plan involves increasing the child tax credit. Trump's vice president nominee, J.D. Vance, has made comments around increasing the child tax credit to up to $5,000 per child. Now, over the last few years, we have seen the child tax credit range from $2,000 to $3,600 per child, so this would be a nice increase for eligible families. But in addition to these tax proposals, Trump is also proposing to decrease the corporate income tax again. Under his tax plan, the corporate income tax rate would be reduced from 21% to 20%, and in some cases, it could even be as low as 15%. Now, as an incentive to encourage corporations to produce their products in the US instead of abroad, he wants to lower the corporate tax rate to 15% for corporations that make their products in the US. Now, we don't know for sure if this would actually be passed, but what we do know is that the previous corporate tax rates actually increased corporate tax revenues for the IRS. And this is likely because more corporations brought their businesses back to the US to use the lower tax rate instead of using foreign entities to avoid paying taxes here, ultimately leading to higher tax revenues for the government despite the lower tax rates. And over the years, regardless of who was the president, corporate tax rates have been dropping for decades now anyway in the US, and the argument is that it is justified by increases in tax revenues, a better economy, and higher levels of job creation from those corporations. But even with this, Trump's tax plan may still lead to a deficit, or in other words, more money going out than money coming in for the US government. And at the end of the day, someone is going to have to pay for these tax cuts. Now, if you watch my video on Kamala Harris's tax plan, then you know that her plan relies on taxing higher income individuals and businesses more. But under Trump's tax plan, he wants to tax foreign goods in countries more by implementing universal tariffs on all US imports, which could be anywhere from 10 to 20% and up to 60% on imports from China. Now, if you don't know, tariffs are simply a type of tax that is assessed on goods brought into our country from other countries or abroad. And right now we are in a trade deficit, or in other words, we are buying more goods from foreign countries than the goods they are buying from us, which poses a risk to US-based businesses and the economy. Now, to fix this, under Trump's tax plan, businesses who buy products outside of the US would pay an additional tax or tariff on those imported goods, whereas businesses who buy or produce products in the US will pay no additional tax on those goods. In 2022, the US had over $3 trillion in imports, which means a simple 10% tax on those imports would result in more than $300 billion in tax revenue for the US government. This is how Trump plans to pay for his tax cuts. In his campaign's own words, as tariffs on foreign producers go up, taxes on American workers, families, and businesses can come down. There has even been comments around taxes like these being able to eliminate income tax altogether in the US. Now, I'm not very big on speculating, so I won't dig too deep into that. But overall, this is the general idea of Trump's tax plan. And that's just where we are right now. More details and plans are coming out as the days go by. So if you want to stay in the loop, make sure you subscribe to my channel for the best tax information and tax strategies. And if you need immediate assistance with reducing your taxes, just head over to mycpacoach.com today to apply to work with one of my CPAs.